Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, look, first of all, these coins, they're beautiful. And I have one of each. I actually have more than one of each. But it's something that you should have at least one of each, that's for sure. I did a video yesterday expressing my opinion that Bitcoin and Ethereum, or cryptos in general, are not the safe haven that people think they are. If an asset is going to be considered a safe haven, it should be something that you can store your money in safely and not have any concerns about any real major loss in value. There might be some, but not when you see 57 and 59%. If you go back to my older videos, just about a year ago, I was saying that cryptos are going to crash. They are going to crash because they're in a bubble, along with real estate, along with bonds. Now people are going, oh, it's a bond bubble. Oh, it was a crypto bubble. Oh, there's a stock market bubble. Yeah, real estate bubble. They're all there. And you're starting to see them all pop, so to speak. Is the worst of it over? No, I don't think so. Governments keep looking for excuses and they're pointing fingers at everything. The markets are already crashing, you guys. And then all of a sudden the Rona came along and they're like, oh, it's the Rona's fault. And then all of a sudden, people started rebelling against it. They started lifting restrictions. People were getting back out into the public. Then there shouldn't have been no excuse for it, but it just kept crashing. And then all of a sudden, Putin's at war. Yeah, it's Putin's fault. That's what we're going to keep on doing. You don't understand. This was an orchestrated event. Currencies are dying all around the world. The governments create the problem, then try to present you with the solution. The solution to everybody was the central bank digital currency. That was going to be the solution. But I said over the last few months, something has happened. Something seems to be changing. I don't know how to explain it, but there seems to be a shift in momentum. Now all of a sudden, I'm hearing all these experts say, globalization is just about dead. Well, globalization is exactly what these people wanted. So if you're hearing experts saying it's just about dead, something definitely is going on. But it isn't going to prevent what they already started, and that is the momentum of the stock market crashing. It's going to crash. Every blue moon, you will see it stop going down. It'll go up a little bit, recover slightly, and then it just goes right back down again. So people are saying, Pimpy, should I sell my cryptos? You know, I guess it really just depends on when it is you bought your cryptocurrency. So although I can't tell you what you should and shouldn't do with your own money, I can only tell you what I've done. Now I have Shiba coins and I have Satama coins. And I said from the get-go, I had discretionary funds, I bought what I wanted, and then I'm just going to stick with them. Whether they crash all the way and they're no good anymore, or whether they rebound and they get up to a point where I'm like, that's enough money that I've made on this investment, I'm going to go ahead and sell all or part of them. And then I've just put that money right back into gold and silver. So gold and silver, yes, they are losing some value. Nothing like the stock market, and definitely nothing like cryptocurrencies. I do believe you should have a diversified profile, but as far as whether or not you should sell all your cryptos, it just depends if you think cryptos are done. If they're over, are they dead? That's the bigger question. Or is it just one of these things like we saw in March of 2020 when they took a huge hit and cryptos became extremely cheap? That's when I did the whole stock watch thing and did the fictitious portfolio in which you take $10,000 and put them into each of the ones that I had suggested, which turned out to be good because some people listened. And they made a ton of money. So congratulations to them. But I keep saying there's a currency war going on. There's a market crash going on. There's all kinds of things happening all at one time. I think countries are starting to rebel against this globalization. They're starting to see that this isn't for them and it's hurting their people more than it's benefiting them. Now, does that mean we're completely out of the woods? No, I don't think so. But you never know. But let's get into this because I want to show you some things that you should be aware of. If you don't mind hitting the thumbs up button, I'd greatly appreciate it. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I'm grateful for that. If you're considering buying gold and silver, and you should at least diversify with your portfolio, I already had a couple of people telling me I wish I would have done what you suggested. We're taking 25 to 30% of my portfolio and putting it into gold or silver because their profiles took a pretty big hit, because their portfolios took a pretty big hit. You know, look, it's never too late. All I'm saying is this. If you're buying gold or silver as an investment to get rich off of, you're looking at it for all the wrong reasons. Now, don't get me wrong. There are times in history, and I think we're at one of those times, and I pointed it out, when the money supply is so out of whack and the gap between the money supply and the value of gold and silver is so wide that it's inevitable that they're going to have to revalue gold and silver. I think we're there now. So can you get rich off that? Oh, heck yeah. History has shown that's what happens. So I'm not saying you can get rich, but what gold and silver is, gold is a storage of wealth, is what it is. That's because it never loses its purchasing power. And silver is the poor man's gold. If you can't afford gold, then you buy silver, because they usually go hand in hand. So when you go to buy your gold and silver, go check out our friends over at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and they will send you a free half-ounce silver. So cryptocurrencies are rebounding a little bit today. That'd be nice if they continued and shot all the way up and set new records. I'm sure a lot of us would be grateful for that. So this is why I'm saying don't sell your cryptos if you've already taken a pretty big hit. The chances are they're going to rebound. So you don't lose any money until you sell your cryptos for cheaper than what you bought it. As long as you still have your cryptos, whether you have a huge gain or a huge loss on paper, you haven't got the gain and you haven't got the loss until you actually sell the cryptos. So just hang tight. Hopefully they'll recover and they get close to the price that you want, and then you sell. But if you already took a huge hit, don't panic now and sell. I think that's a bad idea. That's just my opinion. Bitcoin, they're above the 29,000 and it looks like they're heading up to 30,000. They have a gain of $1,449, looking good, 5% increase. Bitcoin's at $29,842. Ethereum is back up above $2,000. It's at $2,049. It has a 7.15% increase in value. XRP is back up above 40 cents. It's at 42 cents, and it has a 12.6% increase in value. Cardano is at 54 cents. It has a 17.4% increase in value. Solana, it is at $50.79. It has a 16.69% increase in value. Dogecoin's at 9 cents. It has an 8.1% increase in value. Polkadot's at $10.87. It has a it just changed. It has a 29.5% increase in value. Avalanche is at $32.92. It has an 11.62% increase in value. Shiba is at 4013, has an 18.92% increase in value. Polygon is at 68 cents. It is at 15.53% in value. For you people who have not bought cryptocurrencies, this might be the time for you to buy right now. If cryptos are going to rebound, this is the time to do it. We call this buying on the dip. If you want to buy some cryptos right now and use some discretionary funds because you think it's going to continue to go up, there's a link down below. Just follow the link and it'll take you to a website where you can set your account up and start buying cryptocurrencies. Well now, Satama 8032. It is up 41.6%. Good lordy. That is a nice jump. Over the past hour, it is up 3.4%. But over the last 24 hours, it is up 41.6%. On average, though, for the past week, it's still a negative 44.1%. On average, over the last 14 days, it is negative 44.4%. And over the last 30 days, it's still a negative 57.1%. But it's obviously rebounding. Good job, Satama. You were up 41.6%. Silver closed out at $21.11. Got back up above the $20 level. Gold is at $1,812.20. Closing on Friday, it lost $9.30 per ounce. This is gold's delivery weekend, why you're seeing that kind of manipulation. But there is a silver lining. You like that? Huh? You like that? Like how I did that? There is a silver lining in all this that's happening. Let's take a look. This is Ralphie. Ralphie's going to point something out. And shout out to Chris at Arcadia Economics. He brings Ralphie on. And Ralphie does these little weekly reports. But there's a portion of it I want you to catch. And hear what he has to say. Because I keep telling you, people are buying up all of the silver. So let's hear what he has to say.
A question I've been getting a lot on the Endgame Investor and other people who are contacting me on Twitter, etc., is where is the bottom? Now, I do not know the holdings of every human on the planet and their individual value scales and decision-making processes. However, I do see this trapezoid forming in the open interest graphs on the silver trading floor. These lines I drew, this trapezoid, shows a declining price concurrent with rising open interest. Now, we've gone through open interest before on the silver report. What it means is how many contracts are open. So you've got to try to think logically about why open interest would be going up when price is going down. The reason open interest goes up is that buyers are opening more contracts and sellers are opening more contracts and not closing them out. And so the normal pattern is that when price rises, open interest rises with it because speculators are being attracted to the market as price increases and more contracts are open. And then as open interest falls, contracts are closed out, the price falls. That's how it normally goes. So why would price fall but open interest rise anyway? It means that new buyers are coming into the market despite falling prices. The falling price is not scaring speculators out of the market as it was, for example, over here at this top where my arrow is circling. At this point, we had a top, price started to fall, and then buyers were scared out of the market, so they closed their positions and the shorts were able to cover at a profit. That is not happening anymore. More buyers are coming in and sellers are selling their contracts short, and open interest is rising again despite the price falling. There aren't many more weak hands in the futures market. This is the simple silver chart weekly in dollar terms. Now, this line, this gray line across the screen here, is showing what looks to be a triple bottom. We hit it here in, looks like late September, and here just before the turn of the year. It was around 2150, and we have broken below that line just slightly over here. Now, normally, when you have a break of a double bottom there, that triggers a bunch of sell stops because that's how people trade generally. They have sell stops at double bottoms, and when they are triggered, everything gets sold and those positions get freed up and price temporarily collapses. Except we've crossed this line and we've broken it, but there has not been a waterfall decline through it. That is called a marginal break of a double bottom. And if we cross-reference it with volume down here, which is not particularly large, what that means is that there weren't many stops at this level. They've all been cleared out already, it looks like, unless the stops are below 2026 at the 200 WMA, which is possible. But you would expect that after a double bottom like this is breached, that you would have a lot of sell stops. If there aren't any, there aren't any more weak hands in this market, and I don't expect price to fall much further. And if it does, which is still possible, then that dip must be bought.
It's a good report by Ralphie. Did you see what he did? The number of open contracts are increasing on the comics, despite the fact that the price is going down, which tells you that people aren't falling for all these BS tricks that they're trying to pull on us. More and more people are buying silver, despite what the price is on an open market. This is what you should do as well. People are waking up all over that they should hold gold and silver. So don't be left out in the cold. Buy it now while it's cheap because it's not going to stay there much longer. We're going to listen to Frank here. He's a guest on Kiko a while back. He's going to explain what I was trying to tell you. I said there was a currency war, and I found this video today. So let's go ahead and listen to what he has to say, because it'll help make sense about why we're seeing cryptos and gold and silver react the way they are.
Does this get? Just how ugly can this get?
I think it can get a lot uglier. I hope not, but you've got a number of factors at play here. And like I said, the financial war between countries had already started, was already simmering before this war, this hot war in Ukraine started, and now it's full on. And I suspect that there has to be a reset of the global monetary system. It's out of whack. The US dollar is grossly overvalued relative to its trade deficits. And I think that has to be reset. And I don't know, I don't see this happening by way of consensus, like happened during the Bretton Woods Agreement and the 1985 Plaza Accord. In those situations, everybody sat down and came to an agreement about how to create the global monetary system, or how to reset it. I think this go around, you've got a very, very competitive and very strained world in terms of relations. And I think that it's going to be forced upon us by some action that, could be China, could be Russia, could be China and Russia together. We'll have to see.
All right. So as you're saying, obviously, we've had this unprecedented fiscal and monetary stimulus, which has perhaps served to devalue the dollar in the long term. Certainly in the short term, we're seeing the purchasing power of the dollar decline, but yet the dollar internationally is still at a 20-year high against other currencies. Cleanest shirt in the dirty laundry basket for now. But as you're saying, other factors at play here, the war in Ukraine, the weaponizing of the US dollar against Russia, which has perhaps deterred many countries from going the route of the dollar, considering their foreign reserves can just be confiscated, has been the case with Russia here. So these factors, Frank, you're saying are going to lead to a reset. Break that down for me. What does this reset look like? How does it begin?
I don't know, but I can speculate. And I'm speculating on the basis of what I'm seeing happening with respect to gold purchases around the world. I don't know, since 2010, a lot of the central banks around the world have been on a gold buying spree. They've been de-dollarizing, especially Russia, and loading up on their gold in terms of their foreign exchange reserves. And so I suspect that when the reset comes, it could come by way of some agreement between Russia and China. And China is an interesting example. They're not very transparent when it comes to reporting their gold purchases. And so if you look back at, in 2009, they announced how much gold they've been buying since 2003. They hadn't said anything until 2009. Then they announced it. Then they report their annual purchases up until about 2015. Then they stop. They take a break. Then they start reporting. And every time they stop and report again, their gold reserves go up exponentially. Now, they stopped reporting in 2019 at about almost 2,000 tons of gold. But I'm very sure that China, which is the world's largest gold producer, does not allow the export of gold mined there, has a lot more gold than that. And I suspect that we're going to find out at some point. And it may, and again, I'm speculating here because who knows what it will look like, but let's suggest that perhaps it's, they're created in this digital yuan. Maybe it's going to be gold backed for a portion. And remember, you don't need full gold backing to have a gold backed currency. Anywhere between 20 and 40% of gold on your M0 money supply is enough to have a gold backed currency. But let's assume for a moment that China wants to continue to trade with Russia and vice versa. They could create a gold backed currency for trade purposes only. So it's a settlement currency as opposed to a reserve currency. and they could conduct their trade on a net basis. In other words, they would settle every quarter or every period. They would settle with gold, depending what the trade numbers are. And I think that that's potentially one thing that may upset the global monetary system, where the U.S. dollar will no longer be the sole reserve currency, which has had since the Bretton Woods Agreement, and then the world has to decide. And if you think about it from the point of view that almost 80% of the world's population did not condemn Russia after when it was called to a vote at the UN, countries like India and Brazil and South Africa and Mexico and others want to maintain good relationships with Russia. And so in a world where you have a bifurcated monetary system, you have a US dollar system for the West and some other system, maybe a gold-backed system for the rest of the countries. They could easily trade on many countries could easily trade on two systems. And so I think until there's some global consensus, which I don't think is possible today.
Okay. A lot to unpack there, but to your point, Frank, the countries that in fact bought the most gold since 2010, Russia number 1, China number 2. They have been buying gold, they have been hoarding gold, and as you quite correctly pointed out, China still hasn't declared the gold that it bought since 2019. It looks as though it stopped purchasing gold, but as has been the case in the past, perhaps it just hasn't declared that. So let's unpack this reset and this two-system payment, global payment system. One of the factors here that I'm hearing you touch on is the fact that the dollar has been increasingly weaponized following Russia's invasion of Ukraine. And we know that the Russians were looking at accepting, at pegging the dollar to the ruble at some point. They've been trying to move in that direction. So play this out for us. How exactly does this happen? And I realize you're just speculating, but I want to see if you can just elaborate on what you're speculating can happen.
Yeah, so, and again, as you've mentioned, Russia is toying with the idea of a gold-backed ruble. If you look at what happened when they announced, after the sanctions were put in place, and they announced that they would buy gold 5,000 rubles per 1 gram, and that was when gold was $1,945 an ounce. And it was when the ruble was 80 to 1 to the dollar. Okay, then the sanctions fell into place. The ruble crashed. It went all the way to 135 to 1, I think. They put in, capital controls, excuse me, raised interest rates of 20%, and then watched as the commodity prices like oil went up. And if they are thinking about, on that basis, if they're thinking about a gold-backed ruble, the ruble is now about 67 to 1 or 66 to 1. At 62 to 1, that equals, based on what I just gave you, that's about $2,500 gold. And so I think that, again, I'm speculating. I don't know how they're going to do this, but I think one of the reasons that perhaps the West does not want a higher gold price right now is because of all this conversation. And I think they would like to torpedo that idea if they could. I'm not sure they're going to be able to.
Okay, you've touched on an interesting point there, which links back to something that you tweeted, that you think that the gold price is being manipulated. But that's a huge topic. Before I get there, I'm just curious. So you see a system where the dollar is still in play. You've got the yuan backed by gold to some degree, a digital yuan backed by gold, and perhaps even a ruble backed by gold. And you see those systems coexisting with the US dollar?
Yeah, because I think we live in a very divided world. We're in a multipolar world right now. Globalization is over. I think everybody's admitted that for the time being. And so I think you're going to have a world where you have different trading blocks, and you're going to have the friendlies and the unfriendlies, depending on which side you're on. And And I think that there's no reason why the global south, countries like India and Brazil and others, can't trade in both, to maintain relations. So I think that's very possible. And by the way, it could be something else. It could be a ruble backed by gold and other commodities. There are different ways of doing that. I just watch what everybody's doing with purchasing gold and has been doing for the last few years, and I think that that's probably a good guess that gold will be a component of this. May not be all of it, but we'll have to see.
All right. In this scenario, if gold is somehow returned as backing fiat currencies in a considerable way, even if China is buying gold, the US still holds the highest gold reserves in the world by far. According to the World Gold Council, in conjunction with the IMF, the US is at least 4 times the amount of gold that China has at the moment.
Declared gold.
Okay, so you think that, but it's 4 times.
I am convinced that China, when they next report, whenever that may be, will be a lot higher than the 2,000 tons they reported back in 2019. I mean, think about it. They've been the world's largest gold producer since 2007, producing about 15% of the world's gold. And they don't allow export of that gold, mined gold. So do the math. They've mined about 7,000 tons since 2000. Where's all that gold going? Sure, some of it's going to private individuals, which they encourage, by the way. The Chinese government has encouraged individuals to buy gold. Now you've got the Shanghai exchange now. There's a real gold trading system within China, but I suspect that it's a lot higher. And it doesn't have to be more than the U.S. It just has to be enough so that they can use it to trade, to settle trading with select countries.
And why would select countries go that route?
To trade with Russia. Many countries, specifically India, the largest population in the world, wants to maintain its trading relationship with Russia, and obviously is doing lots of things behind the scenes to make sure that that they're able to do that. So I think that it's for that reason only. It's just to be able to trade outside of the U.S. dollar system while all these sanctions are in place.
So you're not necessarily predicting the death of the US dollar as a global reserve currency at the moment. You're just saying it's going to lose its position as the singular top global reserve currency.
It's already lost a lot of, over the years, it's lost as a percentage of foreign exchange reserves of central banks. It's down 60% now. And as a trading currency, it's also gone down percentage-wise. And I think it'll continue until, again, I don't believe the dollar, like every currency that was ever created, will exist forever. I think that the dollar's days are numbered just because they've printed all this money, and they're destroying the value of it. But that could take years for total destruction. And Japan's doing a much better job of destroying their currency than America. And so it's all going to be relative. The U.S. dollar is strong relative to what? The yen, the euro. So I think that the world could possibly live in a system where the dollar exists with a reduced value, and you have some other trading mechanism.
Okay. And that trading mechanism could be a gold-backed digital, central bank digital currency, partially gold-backed.
I dig when Frank talks, but there's one thing I did spot behind him. I don't know if anybody else saw it. Is this him with Soros? Seriously. I know that mug from anywhere. Anyways, that's what I'm talking about. A currency war is already taking place. I think it was a year ago from this past October, I told everybody that the United States dollar was going to lose its reserve status. And if it does that, it'll drop somewhere around 40, 50, most likely 60% of its value would be gone, wiped out, because it's no longer the reserve dollar. And I said other currencies would rise up against it as long as they're not pegged to it. So, and sure enough, that's exactly what's happening. We're not totally out of the reserve status, not yet, but we're getting awfully close to it. But as you can see, between what Ralphie's saying and what Frank is saying, you definitely want to be into gold. Anyways, that's it for now, you guys. I appreciate you tuning in. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.